drop interest rates to next to nothing. Literally, interest rates, as everyone watching this program, listening, knows, were down next to zero. For periods of time, they were negative. The government paid you to borrow from the government. Crazy stuff. Well, here's what happened. No surprise. Every employer, every business in America that had a problem, it produced something that nobody bought. Its workers would demand higher wages. Its technology would break down or wouldn't be the right. Whatever problem a business had, the quickest, easiest, and cheapest solution was to go to the government and borrow all the money it was trying to pump into the economy at virtually no interest. I mean, this is a no brainer. The result is, as I'm speaking to you, that the level of debt of American companies is higher than it has ever been in the history of the United States. We can't have rising interest rates because these companies will then have to fork over money interest on their debt that they don't have. By the way, we have a name in economics for them on Wall Street. They're called zombie corporations. They're corporations whose profits are not sufficient to pay the interest on their already accumulated debt. You raise that interest and they're going belly up. A week ago, Revlon used to be the biggest cosmetic company in the world, declared bankruptcy. It's a zombie corporation, it has been for years. But with rising interest rates, they threw in the towel. They're gone. Okay, that's where we are. You raise interest rates, companies are going to be closing left and right, and that's going to lose large numbers of people their job. And let me be a human being for a minute, just like everybody else. We've just put the American people through a COVID mismanagement costing over 1 million lives in this country. We've had the second worst crash of our capitalist economy in our history at the same time. No sooner were those 2 difficult years over than we smacked our working class with an inflation, and we got the good news for them that by this time next year, you're going to have a recession. You can't do that. When you do that to a working class, you get weird pathological responses from people. They get freaky. They begin to remember and redesign white supremacy. And they think they're going to protect themselves against the collapsing capitalism if they have 3 guns on the rack at the back of their pickup truck. Or they're going to recreate some mythological past by taking away the right to abortion that has been won over the years, when every other country in the world is going in the other direction. We are watching the social fabric rip and tear. I mean, the Republican convention in the state of Texas last week has a plank, issued a statement of their principles. They reserve the right to secede. In Scotland right now, a vote is being prepared for the Scot people to withdraw from the United Kingdom. On and on. We are seeing every assumption break down in society. And I would argue that the core problem here is you cannot tell a working class you live in the best country in the world and it's upward and onward and our best years are ahead of. You can't keep doing that while you beat them over the head with economic difficulty. That is going to blow up on you, and I think we're living through it.
And what about the argument that some of the inflation has been driven by these, what the right wing likes to call, giveaways to people during COVID? Oh, a couple $100 here and there. It's driven the entire economy into this, the inflation into the stratosphere. There's all kinds of explanations, but I would like you to just take a moment to address, some of those kinds of arguments. And they're not only from the right wing. Liberals make many of these same arguments as well. So can you speak to some of those, counter arguments or fake counter arguments or whatever you want to call them?
Well, let me be mean for a moment because this really are playing with people's lives. That argument is basically ignorant or stupid, and I can explain it very simply. Let's suppose that the store owners across America, and the employers who provide them with what they sell in their stores. Suppose they were aware that suddenly there's a great new demand for goods and services, maybe because an extra $300 a week has been given to unemployed people struggling with COVID or whatever. It doesn't matter. There's more demand. More people have money in their pocket and they're going to come to your store and they have the money to spend. Let's remember the storekeeper, the employer, knowing what's going on, has a choice to make. Choice number one, oh, I can jack up my price because they have the money to spend. Or choice number two, I won't raise my price. I will order more goods because I can sell more because the people have more money. The fact that the people have more money doesn't explain the increase in prices. That has to be explained by the profit-driven decision of the seller of the item. Otherwise, they could respond to greater demand with greater production. Here's the irony. You have to follow the money. You have to see if there's more money pumped in, where is it going? For the first 20 years of this century we're living in, the government pumped vast amounts of money into the economy. We saw no inflation. So obviously, money is not a sufficient explanation for an inflation because we pumped more money in the first 20 years than we've ever done before, and our inflation rate was less than it normally was. Okay, so number one. Number two, the reason that happened is that the money didn't go into the regular production economy, of goods and services. It went into the stock market because the people who got their hands on the loans from the government are big banks, and they look to see where the profit is greatest. And buying shares and selling them a few weeks or months later for a higher price, thereby realizing a capital gain, was the game in town. And all the new money, I'm exaggerating slightly, but only to make the point, most of the new money went into the stock market where there wasn't inflation, where the last 20 years have been some of the best years the stock market has ever seen, thanks to the government pumping money in there. Only now that the prices in the stock market have gone so high that the people who play in the stock market have begun to understand it's no longer a question of whether, it's only a question of when the bubble will burst, when these overpriced shares will suddenly come down. And that means the advice you're giving to your rich people, get your money out of there. You don't want to be in the market when it crashes. By the way, the last several months, it has been crashing and people have been hurt. So now the money can't go into the stock market. Now the money is coming into buying land and buildings and hard assets, they're called. And so the price goes up for them. But it's not because the money is there, it's because the people who own and operate enterprises that sell things see it as a golden opportunity to raise prices. But they never want to accept the responsibility. This is childish. You want the credit if the economy is going well, but the minute that your behavior produces an economy going badly, you're finding some scapegoat to blame. Shame on them is really the honest response.
Before we run out of time, I want to quickly continue that line of questioning and ask you a little bit about real estate because you just mentioned inflation, and we have seen over a number of years now that assets, real estate assets, the price of homes, this and that has been going up, 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 up. So on the one hand, home ownership in the United States, which is historically the primary path towards wealth building for working people. Working people don't generally, speculate in the stock market in the way that wealthy people do. They buy homes, and so forth. So on the one hand, we've seen an inflation in real estate, values, the value of homes, et cetera, which has put first-time home buyers in a very difficult position as they compete with, banks and other speculators. Simultaneously, now you're going to see some of that inflation reversing, those prices coming a little bit back down. But oh, by the way, we're going to slap you with higher interest rates, so you still can't buy a home. So, can you talk a little bit about the predicament of working people, younger people, people of my generation, under 50 but over 30, who are looking to begin to enter into that home ownership class, as it were?
Well, you have the bad luck, obviously not your fault, but the bad luck that your parents decided to make you at a time when you're coming into an economy that is basically throwing you under the bus. I mean, it comes directly out of what we were just talking about. When the wealth stopped being in the stock market because it became too overpriced, the money began to look, where else can we go? The big profit engine of the stock market is now too overpriced. So here's what they did: the wealthy individual families took money out of the stock market and used it either to buy a country home or to expand their home or to build a McMansion or any one of those things that you can see in all the fancy parts of every town. Number one. Number two, the very same companies that played the stock market began to move capital out of stocks into real estate. When people talk to you about corporations investing in housing, that's a fancy way of saying the big players look. The largest owner of apartments in Berlin, Germany, is Blackstone, the same company that does that here in New York City or anywhere else in the country. That's become an enormous outlet for capital, huge billions, trillions moving in, buying single family homes